Hi, this is Mark McRae. Thank you for joining me in these trading lessons. Today we're going to look at some simple ways of identifying trades in an uptrend and a downtrend. For this example, I'm using a 1-hour chart of the euro dollar. To begin with, I shall add some basic trend lines. Here, there's a fairly obvious uptrend. And here, there's a fairly obvious downtrend. Next, we shall add an RSI, a relative strength indicator, and instead of the default setting of 14, I will use a default of 21. Also, I shall add a horizontal line at the 50% mark. There we are. 50%. Next, we're going to add some moving averages. To begin with, I shall add a 100 period simple moving average. Or 100 simple moving average. Next, I shall add a 100 period exponential moving average. And next, I shall add a 13 period exponential moving average. And I shall make that one red. And next, I shall add a 21 period exponential moving average, and I shall make that one black. Whoops. And we have two more moving averages, both exponential. The next one is a 5 period exponential moving average and a 6 period exponential moving average. I will enlarge the chart so that it is more visible. Now, the secret of this particular technique is to identify the trend. The overall trend is identified by the 100 period exponential moving average moving below or above the 100 period simple moving average. Next, that's the long-term trend. The medium-term trend is the 13 and 21 period exponential moving average. In this example here, the red line represents the 13 period exponential moving average. It is below the 21 period exponential moving average, which identifies this as a downtrend. Now, what we want to do is only take short trades in a downtrend and only take long trades in an uptrend. Because we have so many averages on here, to make it simpler to identify the 5 and 6 period cross, I have a small code which I will install now. And this will let us know when the 5 period crosses above or below the 6 period exponential moving average. There's no need for this. You can do it visually. This just makes it more simple. Here you can see this is an uptrend. Here, the red and the black lines represent the 13 and the 21 period exponential moving average. As long as the red line remains above the black line and above both exponential moving averages of the 100s, this is a clearly defined uptrend. And the trick is to only take long trades. The yellow arrows and blue arrows represent the 5 and 6 period exponential moving average. when the 5-period exponential moving average crosses below the 6-period exponential moving average, you can see a yellow arrow pointing down, and vice versa. When the 5 crosses the 6, the arrow points up. So for the purpose of this explanation, we are only interested in long trades as long as the red line, the 13, remains above the black line. So this would be a potential trade, so would this, and so would this. All the way up to this point here, where the 100 period exponential moving average crosses below the simple 100 exponential moving average. This makes it no longer safe for the long side of the trade. As an explanation for this, I'm going to go to one of my working charts, and here it's a little more detailed. I'll just scroll along. This is exactly the same uptrend as we looked at in the other chart. This is also a 1-hour chart of the euro dollar. Now, let's see if we can become more specific about our entry and exit. Here you can see that the 21 period RSI remains above the 50% mark from around this point here until around this point here. So between these 2 points, the RSI remains above 50. Also, the 13 period remains above the 21 period exponential moving average. So we are looking to get long whenever the 5 period crosses down and then crosses up. Here would be a trade. This would be a potential trade, this point here. You can also see a bull flag. This particular pattern here is a pattern that appears frequently in both up and down trends. In uptrend it's called a bull flag, and in downtrends it's called a bear flag. So as it breaks the little bull flag trend line, and you have a signal, you have a perfect position for a trade. So this would be a trade, this would be a trade, this would be a trade, and this would be a trade. The market begins to turn at this point here. The 100 exponential moving average falls below the 100 simple moving average, and this period here you can also see is a period of consolidation. There is only 2 directions this can break, up or down. The longer the period of consolidation, generally the longer or the larger the move after the break. For those of you familiar with the surefire Forex trading method, you will recognize this move, this pullback move here is a Fibonacci retracement. But just going over some of our basic rules, you can see the 100 period exponential moving average is now below the 100 period simple moving average, which indicates we're moving into a downward direction. The 13 crosses the 21 down, so we are now in a confirmed downtrend. We are only looking from short trades. Also here you can see that the RSI remains below 50 from this point here until this point here. So this area here is generally a safe area or a higher probability area for down moves. So you would only be looking for moves to go short or short trades. So here, this is a great move. Here is a great trade. Here is a great trade if you could catch it. The market moved fairly quickly here. You may not have had time to get into the market if you were using a 1-minute or a 5-minute chart for your entry. And from this point here, the 100 crosses above the 100 simple moving average, an indication that the trend may be changing. Now for longer analysis, and those again familiar with the surefire Forex trading method, we will add a Fibonacci line. Here you can see the market now retraced up to the 38.2 retracement level. This was an excellent level to look for a move back down, which you got here. And by the way, you can't, as I mentioned in the other chart, the yellow and the blue arrows represent the 5 and the 6 period exponential moving average. They're not visible on this chart, as I've taken them off so that the chart doesn't become too cluttered. On larger time frames, this move would probably appear as a bear flag, this downward move here. And also, those people who have subscribed for some time will recognize this as a 1, 2, 3 move. So all of this information here confirms that we were in a down move down. And for the Fibonacci retracement, the obvious target would be here. So there's 100 pips on this move down here. I have to keep these lessons fairly short, as it takes a lot of resources to have these on the website. But if you prefer this type of lesson as opposed to a text or an HTML email, drop me a line. Let me know you prefer this type of lesson where it's more visual. So good trading. Thank you for joining us, and I shall see you in the next lesson.